What up, guys? So Qualcomm is continuing to break away and hit new highs. This past Friday, it was up 12%, and now it's trading at about $240 per share. Now, we covered the stock about 11 days ago, so we thought we'd circle back, give you an update, and tell you what we're thinking about the stock at the current prices. Now, full disclosure, we happen to own Qualcomm. We bought in a year ago at about an average price of $150 per share. So obviously, we're very happy with the current performance and with the way things are going. So we'll also tell you what we're thinking about our position, how we're thinking about managing it going forward. All right, so let's start with the rally. Why did the stock rally 12% this past Friday? Well, it wasn't due to any fundamental shift in the company, but rather to news that the market saw as catalyzing the existing strategy. As we know, Qualcomm is reinventing itself from being a mobile chip player to being an edge AI and diversified computing player that will lead innovation in IoT and automobile AI solutions, but that will also compete with larger chip designers in the data centers business. Now, last week, three things happened that were good for the business in that regard. The first was that Stellantis announced an expansion of their multi-year partnership to integrate Qualcomm's Snapdragon digital chassis into their entire next-generation vehicle portfolio. Now, if you're not familiar with Stellantis, they're the fourth biggest car manufacturer in the world, and they own about 14 major brands, including Jeep, Ram, Dodge, Chrysler, Fiat, Maserati, and Peugeot. So this is great. What this means is that all of the cars they produce will now rely on Qualcomm to provide the unified brain, so to say, that will govern the entire dashboard, the touchscreen, the 5G connection, and most importantly, the automated hands-free driving features that are in these cars. Now, we don't know how much the deal is actually worth, but it spans millions of vehicles. And so if Qualcomm makes about $200 to $500 per vehicle on millions of vehicles over several years, then this deal alone could drive significant growth. Now, the second piece of news is that Qualcomm is vying to acquire chip startup Tenstorrent. If you haven't heard of Tenstorrent, they're a company that's led by Jim Keller, the legendary engineer who designed the chips that powered early iPhones and Tesla's autopilot. The company makes highly efficient AI chips built to compete directly with NVIDIA. Well, as we said in the last video, Qualcomm announced in their last earnings call that they reached a deal with a leading hyperscaler and that they're starting to get into the data center business. This acquisition is potentially an accelerant in that regard. Qualcomm wants to fight directly with NVIDIA for that market, and so getting Tenstorrent will give them the IP and design of an elite chip that will allow them to compete meaningfully. Now, the last piece of news is that Qualcomm is supposedly in talks with OpenAI to supply them with custom chips for an AI-native smartphone slated for 2028. So what does this mean? Well, OpenAI is trying to build a phone that will replace our traditional phones and the app icons we typically see on our screens with an AI operating layer. The phone would basically be an AI agent. And for Qualcomm, this would reposition them from just supplying chips to Apple and Samsung to being a key hardware engine powering this new technology. And so this piece of news is potentially a nice move towards that edge AI narrative that we talked about in the last video. All right, so what do we think of all this? Well, first, the Tenstorrent and OpenAI deals are still speculative. We're not sure whether or not they'll happen, and so we just need to wait and see. The Stellantis deal, on the other hand, is great news for the automobile segment. That's exactly the type of thing we want to see Qualcomm pushing on. But zooming out, big picture, when we look at all three of these headlines, there's actually not that much surprising here. We expect Qualcomm to be pursuing these types of deals, especially given the fact that it's reinventing itself. That reinvention, that diversification away from the mobile phone business is a tall order. There's still a lot for them to do in order to become that edge AI diversified compute player that they're envisioning. As you mentioned in the last video, 60% of their revenues is still tied up in the legacy mobile phone business. And so in order for IoT and auto to become more prominent parts of the business, they need to grow rapidly. Auto looks like it's on pace, but IoT is lagging behind. It's not even close to the growth rates that we'd like to see. So all this is good news, but it's expected. We need to be seeing this, especially given some of the newer execution risks that have come up, like China's antitrust probe into Qualcomm. As you know, Qualcomm's business is highly exposed to China, so that's a serious risk. So given all of this, here's what we're thinking on the stock. At $238, we think that Qualcomm is still trading at an acceptable price that's within its fair value range. But at this price, we're not going to increase our position because we think that there are execution risks here that demand a margin of safety. At the same time, we're not selling out. This is a great company whose management is aligned with the right things. They're seeing where the world is headed and they're pivoting really well. So we're staying with this one hopefully for a very long time. Now, because of the massive rally, Qualcomm ended up becoming our biggest position. And so we trimmed a little bit. We trimmed by about 15% and then reallocated most of that capital into Meta stock. We think Meta is really attractively priced right now. And so if you got in early and Qualcomm also became a larger position than you anticipated, that's something you may want to consider. Now, if you haven't bought the stock yet and you're thinking about buying, again, that execution risk is what we think is the main consideration. That reinvention, that diversification away from mobile phones is a tall order, and in our opinion, we think it demands a margin of safety. All right, so that's what we think about Qualcomm. If you want to dive deeper into Qualcomm, we just did a video on it. I'll link that here so you can check it out. As I also mentioned, we think that Meta is pretty attractively priced right now. We did a video on them not long ago, so I'll link that here as well. All right, hope you enjoyed this. Hope you found it useful. We'll see you at the next one.